Let's get into some market commentary of the day. Stifel strategists, led by Barry Bannister, say that they see cyclical value stocks leading into mid-2024. Looking into the next decade, Bannister maintains his view of the S&P 500 as a secular bear market, saying, quote, "We expect a range-bound S&P 500 in real terms to continue into the early 2030s. Here with more on this, we've got Yahoo Finance reporter Madison Mills. Hey, Maddie.
Hey, yeah, it's never good news when you're not hearing a high price target for 2024 and then you add in this is going to continue well into 2030 here. But that's the view that we're getting in this report this morning, saying that there's going to be an H1 rotation from cyclical growth to cyclical value names. And what that means is basically that these big names we've been talking about constantly, that Magnificent Seven, is not where you're going to see growth in 2024. You're going to see it in a little bit more of these value names. Think energy, financial services, banks, real estate. But because of that rotation, these are names that are not going to have as much weight in the overall S&P. So they're making the point that you're only going to get to a max of 4650 heading into 2024. And that's an interesting dynamic because we've heard a lot of investors talking about finding that growth in these smaller cap names as we head into the end of this year. They're saying that that's also going to be what carries the market heading into 2024 as well, guys.
Maddie, how does the Fed calculus here fit into his call? Because you talk about the fact that he does see a reason to favor cyclical value stocks as we look ahead to 2024. Of course, what every single investor and strategist is going to be asking an economist is really what that timeline looks like for Fed rate cuts. How is he thinking about that?
Yeah, so they're saying no cut in March, which is interesting given that we are starting to see a little bit of pricing in the market, more so for a cut in March than not. Also, the argument here from them is that the S&P has already reflected what they're calling a COVID-warped pseudo-recession. And one key part of the macro recession calls, of course, is the labor market. They say that some of the correction that we've seen in the labor market is just kind of, again, impacted by COVID, which is what makes this moment in time so interesting and so hard to call, right? Because so much of it is impacted by this once-in-a-lifetime event where we saw a labor shortage followed by severe amounts of hiring and then a correction. Now we're finally starting to see a little bit more of a clear crack in the labor market. But their call here is that we already saw that pseudo-recession. We saw it in some of the earnings reports. So we're not necessarily going to see a hard landing heading into 2024. And they're thinking that the Fed is going to control that by not necessarily cutting in March.
Yeah, it's been interesting over the course of this year, especially coming from Barry Bannister and his team. And they had been right about one kind of tale of two halves that they had forecasted in January, saying essentially that there was going to be a rally early on in the year, but there could be some turmoil later on. That played out. But now, after November, we've seen many of the kind of broad-based rally kind of re-ensue here. So their expectations here going into 2024, does that spell out to us mild recession, shallow recession? What are they kind of forecasting there?
I think they're thinking kind of in the soft landing area, and that's why we have this mid-range target call in the 4,600 range, which is very different than a lot of the other calls that we've been talking about, guys. And, you know, BOFA saying 5,000 with Savita Submarinian there, and a lot of the other banks hitting that 5 number. This is more of a moderate call, particularly when you compare it to the JP Morgan Marko Kolanovic team in the 4,200 range. This 4,600 number feels like maybe it's, dare I say, a Goldilocks moment, like the Fed is maybe looking for here. So it feels like a little bit more of a middle of the range view.